Hope you guys doing fine. I hope you're doing wonderful. I hope you're discoing. Happy New Year. Glorious Happy New Year. Nothing but love and disco ahead of us. Hope you're doing wonderful. Hope you're doing fine. How you guys doing? I hope you're doing good. I hope you're doing fine. Hope you're doing wonderful. I hope everything is okay in your end. Hope you're really discoing. This is a market brief for the equity market, the Dow Industrial, and etc., etc. And this is the equity put to call. Let's start with that. I was arguing for this ratio to increase, and it did. It's at 56 right now, 0.56. I was arguing that the big increase starts with a positive divergence. And this is what happens. You can pause and you can see how effective it was in the past. Very effective. Very effective. An increase in this ratio means a retracement or pullback or sell-off in the equity market. Good deal. So what do I see here now new? A negative divergence between the price action and the stochastic. So we might have retracement to this bad boy, which means a rally or a rally in the equity market maybe. But what is different now is the MACD indicators above the zero line. Every time in the past it gets to that area, produces volatility in the equity market. You can see the time. This is doing a pullback. Okay, a pullback. Mini one. A slight mini one. Okay. So I'm still bullish on the equity put to call, which means bearish in the equity market. Let's look at the VIX. The VIX is a very important number, which had rejection many times from that area. This box right here goes 2 to 3 years right here, this area. And we had positive divergence. And this is what happened. Almost 50% increase right here. Okay. So now what's so bullish about it is you have a rejection from lower price at the semi-bottom with a good bullish candle, and the stochastic is coming out oversold at above 20, and sometimes, most of the time, something happens when you do this like here, like here, like here, and it's self-explanatory, even the mini one right here. So that indicates volatility in the market, still there. This is the daily time frame for the VIX. Let's look at the weekly time frame if we see anything at all. Consolidation above this thing I told you about for years. I'm not using Elliott wave. I'm just doing the conventional technical analysis now, just to make it simple, make it very simple. So let's look at the mighty dollar, the king. All right. So the king dollar. What does it tell me now? In the daily time frame, it rejected a breakdown, a low that made last Thursday. And this low came at the end of the Bollinger Band, which is very bullish when you want to do a mean reversion trade. You closed inside. Good deal. Bollinger Band closing inside. That's bullish. Bear trap, because he did not close below the breakdown. So that's a bear trap for sure. Okay. Now, you have a bullish engulfing in the Japanese candles, which indicates a high probability you go into the 20 period moving average in the daily time frame. Very, very high probability. Like you had here, you closed inside the Bollinger Band, then you did this. Okay, it happened many times, you could see. So this is the price action. analysis in the daily time frame. No Elliott wave, just focus on price action, conventional technical analysis. Okay, so this is the MACD. It's in the bullish mode. Usually, you have a bullish crossover, you kiss, you have a pullback with that kiss, and you go up. Now you want that bullish crossover in stochastics. A lot of good things happen when these things go together, at the same time. Bullish crossover with the kiss and bullish price action in the daily time frame. Good? Beautiful. So we have bullish divergence as well. A month bullish divergence. It's obvious in the stochastic. RSI, which is extremely reliable to measure the bullish divergences. You can see that even in the past, in August, right here. And that time you marked a top in gold. So this is really important. So you really, if you're really trading something against that is related to the dollar, watch out, including the equity market now. Okay, and you might have, I'm not sure, you might have an up leg like this one. You might go all the way. You might have a measured move from this high to this low, 1.62 Fibonacci extension. It's possible. We'll see. So the histogram is above the zero line, which is always bullish. MACD bullish mode with the possibility of a kiss and up our side. So let's look at the weekly time frame. It's even better. You can see the importance of bullish and bearish divergences in the dollar. So anybody that ignores that, I don't know why they do that, but they do. Okay, bullish divergence, up leg, bearish divergence, down leg, so on and so forth. Okay, higher high, lower high, and this happened. Now we have, in the weekly time frame, we had this one right here in the past. It's the little bitty one, bullish divergence, boom. Now we have a longer time, a longer duration bullish divergence from here to here. And if you want to argue against that, I'm not listening, because I really believe in this stuff. Bullish divergence in the weekly on our side too. So what's bullish about the USD in the weekly time frame? Rejection from a semi. It's definitely a bear trap with a price memory from 2018 right here. You can see this conjunction right here. Conjunction right here. Okay. So price memory from here. Bear trap here. Closing inside of the Bollinger Band, which indicates a mean reversion trade to almost 92 something. And after that, I will do the Fibonacci extension of high to low and so on and so forth to hopefully try to find a price. Sometimes it goes all the way to 20 to the upper end of the Bollinger Band. So we will see. Do I have doubts that the dollar is going to bounce? I really don't. That's why you have to have the belief. And I'm sorry if you got frustrated from me and from the dollar. You have to believe that in the story. Okay, so now, we go to the Dow Industrial. Good. No Elliott wave, just pure conventional technical analysis. Let's start with the MACD. Bearish mode. A possibility of that kiss I talked about. Bearish mode since December. Possibility of the kiss, we might go down after that. We don't know the future, we just learn patterns. So bearish mode. Possibility of kiss, we might go down. Okay. And do I have any sell signal? Nothing yet. Nothing ever. Since November, you never had a sell signal at all. Except maybe here. But you were consolidating. After that, No sell signal. Okay, so what's bearish about that? Bearish wedge. We start with that. After that, bearish divergence. Is that to be taken lightly? Not to. I'm sorry. I'm stuck. How do I think this works? Because I look at the past. 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 So on and so forth. You can go sometimes, and you can see that it works. To me, it works most of the time. So if I know something, why just? If I learn something, why just repeat it? Why do I get all of a sudden I'm trying to be random? I don't think random people, nothing would work for them. If you have any doubts about that, I really don't know what to tell you. Because history rhymes most of the times. And if you look at the last 2 years, this thing's worked 100% of the time. 100%. Okay? So, what bearish about this one? Bearish mode that starts, that is the introduction of the pullback. Bearish divergence. Okay? Bearish wedge. Still, the 10-day moving average is pointing up. That means nothing to me now, to tell you the truth. Once you have the bearish divergence, I'm out. So, why the market keep going up? As I tweeted once, I think because people are closing the books now. A lot of portfolio managers, they want to have a positive year. And some of them are trying to catch up with the benchmark, so they have their own FOMO. And this produced that. In the weekly, it's you can see longer term bearish divergence is the same thing. So can they keep it up for a long time? I really don't think so. I think the first quarter you will have fresh money that will take the market up sometimes. But I think the market is due for pullback, not because I want to, because of the structure bearishness I was talking about. And this is the put to call too. Finally, I want to talk about the importance of the bullish crossover in between the 20-day moving average and the 50-day moving average in the put to call. And you can see only one time right here, and it didn't last for long. Only one time it did not produce a pullback, but the pullback came before that. So you could say any close space between the 20 and 50 produces volatility. You could say that. Only one time, this time, the pullback was here. But it crossed over, then it rallied. And this is during the election, so I could think of it as a blip. But this signal, which I call disco signal, worked almost 100% of the times in the last many years. Many years. You could play with it your own time, and you see the importance of this bullish crossover between the 10, 20 and the 50 in the equity protocol. Okay, so now it's pointing up. It's very close, only 8% between the two. Maybe the first 2 weeks of Jan, this thing will consolidate and go up. All I'm saying is, in the past, when this space gets closer, bad things happen to the market. And it's almost 100% of the times in the past. I wish you guys the very best. I wish you love. I wish you life. Please like if you like. Subscribe if it's your first time. And please do remember that nothing is forever except disco's forever!